QQQ fell off a cliff today and the fear and volatility index spiked all the way up to 21. I'm going to talk about exactly why that happened and the 5 stocks that I'm buying right now during this market dip. So let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. As you can see, portfolio took a little dive today, but I do want to do a monthly progress report to show you exactly where we stand. So today, closed out a nice profit on some Robinhood LEAPS that I called out in my group. So that was a nice day today. But let's go ahead and go to a custom date range. And I'm going to show you July. And then obviously at the end of August, I'll show you those results as well. But let's go ahead and go to it. As you can see, 65K, obviously results vary, and there were no losses for the month of July. And this is all excluding capital contributions. So this is just pure profit. And again, results vary month to month, but for me, that was a 5.7% ROI for the month. So one of my better months out of the year, and I'm definitely hitting my target return goals. So I'm not the only one doing it. As you can see here in Options Trading University, our clients share their inspiration. Sarah here, this is her 2nd month in the program. As you can see, she's sharing her wins there. Trad, this is his about 6th month in the program, consistently hitting these numbers. Obviously, results vary based off account size and risk tolerance, but you could see many clients today participated with me in those hood leaps. Okay, and that's something that I call out here in my LEAPS entries and exits and my Ryan's Trades channel. So if you want access to that, that'll be at the top of the description below this video. But let's go ahead and dive into it. What exactly sent this market south today? Okay, well, the first thing is that payrolls came in a little bit softer than expected, okay? The July jobs report came out, showed non-farm payrolls expanded 73,000 last month, well beneath the consensus estimate of 100,000. So jobs are starting to, slow down, right? Job growth is slowing down. Interest rates are high, all right? And that gave basically the ammo for some people and investors, institutions to go ahead and take some profits, right? And we saw that. And I did notice that a lot of people were saying August and September are historically the worst months out of the year, but I wanted to actually disprove that because August, okay, Tasty Live did a study, a 5-year and a 10-year average study on the NASDAQ, and actually August tends to outperform. As it says right here, August is a bullish month for forward/NQ, which is NASDAQ futures, on a seasonal basis, okay? Over the past 5 years, it's been the 3rd best month for the index, with an average gain of 2.73%. And over the past 10 years, it's been the 5th best month of the year, averaging a 1.44% gain. So yes, we did have a kind of dump into the first day of the month, but August tends to outperform. So with that being said, right, I definitely went in a lot today in some of my favorite stocks, and I'll show you exactly which ones those were. But the soft jobs report was a big factor today in my decision-making process for actually doubling down on some of my favorite stocks and getting into some LEAPS call options. The reason so is because the current target rate is 425 to 450 basis points, right? Rates are coming down, all right? If you look at the probabilities for a rate cut in September, that went up to 80% today. That was a huge change in the rate cut odds. So what we're looking at right here, if you've never seen this before, is the CME FedWatch tool. I look at this because this helps me determine, is the stock market bullish or bearish, right? If we're raising interest rates, we're in a bearish environment. If we're lowering interest rates, we're in a bullish environment because businesses and consumers can borrow at cheaper rates, spend more money, and that money goes and flows into the equities market. So this was showing just the other day that we weren't going to get a cut potentially until December of this year. But now there's an 80% chance we're getting one in September because of this soft jobs report. So that is massive for the markets. And this is exactly what we want to see, okay? Especially on a day where the market's going down, because it does help us determine, okay, is this a good spot to kind of buy the dip, right? So as you can see, QQQ, which tracks the NASDAQ 100, kind of hit my target zone here that I drew out. And I talked about in the last video, or it might have been the one before that if you haven't watched the channel, okay? Again, if you're enjoying this so far, please hit the thumbs up. I highly appreciate that. And subscribe if you aren't already subscribed to the channel. But as you can see, we hit our target zone, okay? Kind of hit this bottom trend line almost. And potentially we might flush into Monday as well because it's looking a little weak here going into the close. The VIX, the Fear and Volatility Index, spiked all the way up to 21, okay? So what does this mean? And if you haven't looked at this, this is exactly the indicator that shows me how much cash should I have. When the VIX is low, greed is at all-time highs and markets are at all-time highs, I have more cash on the table. Now, when the VIX is high, that's when I have less cash because I'm allocating my cash as the fear is increasing, because you want to be greedy when others are fearful and fearful when others are greedy, like Warren Buffett said, right? So that's my ideology here. And let's take a look at the VIX levels. As you can see, the VIX cash allocation levels, mine for 2025 and 2026 and going forward, okay, we're currently right here between VIX 20 and 30. So technically, I can be 80 to 100% allocated with technically 0 to 20% cash on the sidelines. I currently have 15 because I believe that Monday the market will have one more flush down and then potentially bounce from there. So, what we did today was we allocated a lot of cash. I had, I believe, around 22% before going into today. And then I allocated more to some of the stocks I'm going to be talking about. So I believe that this VIX spike was kind of the top. Yes, we might have a little bit further of a flush on Monday, or we might not, and this thing might rip upwards based off of good news over the weekend, okay? But either way, I wanted to make sure to take advantage of today's volatility to sell options. That's the best way, in my opinion, to take advantage of the markets, and I'm gonna show you exactly what I did, okay? So let's go ahead and dive into the first stock I wanna talk about is Amazon, because this thing took quite a dump after earnings. They had wonderful earnings. They beat earnings, but basically the forward guidance was a little soft for Amazon, okay? So it did take an 8% dump. And taking a look at the charts, Amazon, flushed below this lower Bollinger Band on the daily time frame. So that was a wonderful opportunity for me to pick up some more Amazon. Now, did I buy the shares? No, I did not buy the shares. Instead, what I did, and we're gonna dive into the account. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary, but if you take a look at the account, okay, I'm gonna go to my Amazon position right here. We currently have 132K of cash secured puts on the line, okay? What I did today was I sold two 215 puts, okay, to collect about 1,000 in premiums, all right? Now, those numbers vary, obviously, because, and they're not guaranteed because the stock is always fluctuating. In fact, if I were to go to that same cash secured put right now, I would be able to collect even more in premium, okay? But I went right at the money. At the time, it was like a 45 delta. The reason I did that is because I love Amazon at 215. So I get paid the premium, which was about a 3% ROI, okay? Again, numbers aren't guaranteed because the stock fluctuates, but 3%. So worst case scenario, if in 29 days that Amazon expires, below 215, if the stock is below 215, I'll be forced to buy 100 shares. Totally fine with that in the long run because I'm going to show you exactly where I think this thing is going. I think it's going back to all-time highs. I think it's going back up to 242, and I think it's going to do one of these things, okay? And that's just my current projection for the stock. So amazing company. I use it on the daily, right? So it's one of those companies that's easy to understand. Good PE ratio, 35 right now, and it's almost to that oversold range. So this was a perfect opportunity to load up more on cash secured puts for myself. So that's going to be the first stock. Now let's talk about the second stock, which is Robinhood, okay? Robinhood broke out of this trend line that it's been following ever since the crash. And that was an opportunity, especially because it touched almost this lower Bollinger Band, for me to actually go super aggressive and buy some LEAPS call options. So I did that, okay? What we did, and I'll go into the portfolio, the calls aren't here anymore, but I bought I believe it was the 85, maybe it was the 90s. It was the 90 call options, okay? I bought 8 of them for 26K, and I basically sold out of them for 30K. So we made almost pretty much over 10% on our money in an hour and a half. Now, obviously, those results aren't guaranteed either, because that really depends on your skill set, right? For me, I've been doing this for a long time, so that was kind of a good entry point for me, and I was willing to hold on to these until it went up, right? I went out to 2027, so I had plenty of time to be right on these, and it happened to work out for me in one day. And that's the leaps that all of my clients participated in that I showed you earlier in this video, okay? So I took that profit and then I rolled it into something more safe, okay? So what I did was I took all of that profit, and now I have 141K worth of cash secured puts. So I went to the options chain. I went to August 29th, and I went down to the 94 strike. Now that's a 4.5 ROI, okay? Obviously results vary and they're not guaranteed because the numbers are always fluctuating, but I collected about $4, all right? And that seemed like a pretty, met my return goals, and I liked it. So I sold that cash secured put, collected $4 per contract, and I just have to wait 28 days. If the stock falls below 94, I'll be forced to buy 100 shares, but I keep that premium that was initially paid to me. So now we have a large position for August, collecting 5K in premiums. Results vary. Okay, so that's going to be Robinhood. I think this stock, the PE ratio went below 50, all right, and this is a company that is a high growth company. There's so much room left on the table for this company to go, potentially to 200, and I believe it will in the long term go to 200. So that's just my take on it. I'm comfortable trading stocks that have a nice upward trends on the long-term chart. So that's why I look at the daily time frame here on TradingView. So that's Robinhood, and what a wonderful opportunity. I believe it's still a wonderful opportunity as it's trading below this mid-Bollinger Band line and below right at the $100 level, okay? So Robinhood, another one that beat earnings, amazing earnings, and the stock didn't quite pump up. So I like it here, all right? Now, let's talk about NVIDIA, because NVIDIA dipped down a bit today. So this was an opportunity to basically get in, kind of bounced off this trend line, and it looks like it's headed back upwards. So that was kind of a great opportunity as well. In the portfolio, if we go to positions, I'm already kind of over allocated here. I've got 116K in cash secured puts. And, as you can see, I have a lot of the 165 puts that I sold, and then a 170 put. So as long as the stock stays above those levels, I'll get to collect this premium right here, and I won't have to buy the shares, okay? But I like earnings week. I went out to August 29th, take advantage of the high implied volatility, and I went to the 165s and the 170s. So that's a 3.3% ROI or a 4.3% ROI, depending on strike. Results vary. Those aren't guaranteed numbers based off of where the stock's trading at by the time you see this, okay? So those are, wonderful strikes for me, and I would be glad to own the stock at those prices. Long term, again, if we just draw this trend line out to mid-September, it looks like this thing is gonna head to 195, maybe even $200 by October, okay? And that wouldn't be far-fetched, as the PE ratio is at 56, and competitors like AMD are trading at 120 PE ratio or higher. So huge profit margins here on this company, and I think this is a wonderful opportunity, right? And maybe Monday I'll add one more, okay? So that's gonna be NVIDIA. That's the third stock, okay? Let's talk about two more stocks, one of them being HIMS, all right? We have earnings on Monday, and I believe HIMS is gonna provide some valuable opportunity here. We already peaked out. We hit this 70 area and bounced right off. Today was a nice dip, a nice flush on HIMS, okay? Wonderful for an entry if you want to play earnings. And I'm playing earnings. So I'm gonna show you exactly what I have in the portfolio. I think that on good earnings, this thing will probably surpass 72. I think it'll be in the mid 70s, okay? So somewhere, let's just draw it out, somewhere in this range, all right? I think it could head up there on Monday if earnings are blowout. If earnings are kind of right in line with expectations, I think it's going to trade somewhere around the same area. And if earnings are lackluster, probably could trade back down to this like 55 area, okay? So that's kind of the expectation, but let's look at the expected move according to market makers, okay? So as you can see, I have 20 cash secured puts, 100K in cash secured puts, all right, to collect 9K, 9.5K in premiums. Now, if we go to the options chain, okay, I went out to August 29th. So I just went ahead and went to the end of the month. Now, my strike is, safe in my regards. Like I feel like I'm willing to own the stock at 50. This is a 5.5% ROI. Obviously, results aren't guaranteed because these numbers fluctuate, but that's a 19 delta. So it's a 19% chance of the stock actually going down there. But let's look at what the market makers are saying. So after earnings, it could be plus or minus 11. So this thing could get all the way up to 73 or as low as 51. So 50 is right outside of that expected range. That's why I feel comfortable at that strike, according to the earnings market maker data. Okay. So again, 73, which would be, somewhere around this area, or 51, which would be somewhere around this area. Okay. So HIMS, wonderful opportunity. PE ratio is 91, and this is an extremely fast growing company with high double digit growth numbers. And long term, chart looks beautiful. This is the type of chart you want to see on a stock that you trade the wheel on, right? I trade the wheel option strategy on this stock, which I'll have a tutorial at the end of this video, but this is one of my favorite stocks to do it on because the premiums are definitely higher than most stocks. Okay, let's go ahead and go to the last stock that I took advantage of today, which was Dash. This thing barely saw a pullback, okay? Yes, it did pull back a little bit down to this mid-Bollinger Band line, but barely. I mean, let's take a look at how far it went down today. Currently, it's down 1%, but from yesterday, I mean, down 3%. That's for a high PE ratio stock, that wasn't that big of a pullback. Kind of like Palantir today, trading similar levels. But wonderful move there. And I said, you know what? Why don't I add more to my position today? So if we go into the portfolio, you're going to see that I added one more earnings play, okay? 227.5 puts. That brings my total position up to 67K. And let's go to the options chain. The reason I went to earnings because there's high implied volatility. I want to take advantage of selling expensive options, right? I want to sell that premium. Collected 465, which is about a 2% ROI. Results aren't guaranteed because these numbers fluctuate. But for me, said, you know what? I'm fine getting assigned there. And if we look at the expected move, it's $25 from here, okay? That puts it around, 222. So yes, the stock could fall. It could fall somewhere around this area, but that's fine. It'll fall right to that area. And, I'll be able to sell some covered calls and collect a premium on my shares, okay, if that happens. But I'm totally fine with it. To give you a perspective on how far down that is, 227.5 is about right here. And that's not even subtracting the premium I collected for the option, but it would have to fall about 8% for me to get assigned on the shares. Okay, so pretty far away. I'm lower than the lower Bollinger Band. And for me, that seemed like a pretty good entry considering that the stock held strong during this nice dip, okay? So again, get your ducks in a row, look at the markets. Yes, we might flush a little bit more on Monday. If we look back at QQQ, we might, hit potentially the lower Bollinger Band or kind of hit this trend line again, maybe dip slightly below it to 548. But I think that's pretty much that for the bottom there. So in my opinion, I think this thing will be headed higher. And I look forward to seeing you on Monday. And again, if you enjoyed it, please give it a thumbs up, and I'll see you in the next one. Take care.